What's going on, you guys? This is Aaron from Departures Capital, and welcome to the video. In this video, we're talking all about the markets as we are seeing a rebound in tech. We're seeing gold and silver pretty steady, and we're talking about one unique commodity that surprisingly is not gold or silver, and we're talking about three interesting companies in that sector. So stay tuned to the end of this video to find out what that commodity is and all about those three companies. I also want to say we're so close to 29,000 subscribers, guys, just a couple subscribers away. So don't forget to hit that subscribe button if you didn't already, and let's get this channel to 29,000. So without further ado, guys, we're going to get straight into this market recap. And I also wanted to go over the comments from yesterday's video, just as we did get that news for ACB. We got the new CEO, finally those goodwill write-down. So we're going to be taking a look at all the comments to see how you guys feel about it, because I am pretty interested. So anyways, let's get straight into it. And the last thing I got to say before we do that is, of course, do support me, the channel, and all the videos, and don't forget to explode that like button. It means the world to me and helps my videos so much, along with if you are a new viewer to the channel, haven't had a chance to subscribe yet, but you appreciate constant, steady updates in the markets, a steady flow of new and exciting companies, or you want to learn a little bit more about investing and get me to 29,000 subscribers, then don't forget to cash that subscribe button and ring the market bell for notifications. Let's get straight into this video, guys. So it's another cloudy, foggy, rainy day here. Let me know how the weather is in your specific city in the comments below, or just feel free to voice your opinion on what's going on in the markets. All comments welcome, and they really help my videos. But in terms of comment of the day, when it comes to ACB and Tesla, we got a lot of comments saying, you know, people are panic selling. First comment of the day goes to D&D Finance, and that is because everyone is panic selling. What to say? Will the bad news finally end for Aurora now that they have written off the 1.8 billion worth of goodwill? It's hard to say. I think, you know, now it depends on results. So I think with goodwill, most of the goodwill in the rear view mirror, which is a really good thing in my opinion, I think now the company just needs to show investors that they can actually consistently generate decent revenues. I would love to see them get above 100 million per quarter consistently, with expenses continuing to drop. That's what they really need to do. They've been focusing and trying so hard to lean out after all the stuff that happened in the past. And Ben Moyes, haven't watched for months, but gotta watch you when I see Aurora in the title. Your camera's looking way better. New camera, and yes sir, it is a new camera. And yeah, it's been a while since I've talked about ACB. Of course, we'll be talking about the company when it comes to their quarterly earnings, which I'm pretty excited, you know, to see how they can do. It's not like I don't follow ACB anymore, but it's just been a disappointment yet again. So we'll keep you guys updated when it's appropriate. Sika 1000, 10 minutes and 10 seconds ACV. That's wrong. They wrote now they will achieve EBITDA positive in Q2 and no longer in Q1. Makes me angry. And yes, thanks for that correction. And I did read that after the fact. And yeah, they postponed now to Q2 of 2021 in terms of having a positive EBITDA quarter. It was a lot of, you know, potentially not so great news, or the news that we didn't want to hear, but at least they're telling us what's going on or what the new plan is. And pretty much all we can do is wait and see. So we'll let you guys know after the quarter once they report. Next comment today goes to Nat. Tat is doing well. I'm super happy. And yes, I wanted to pull that up real quick. For you guys. And Tat is up another 5% today, up to $1.25. So Tat's been doing very well since the IPO. IPO'd around 70 cents. You know, we started talking about the company from the first day. We've interviewed their CEO, their new CEO, Seti Coscarella from Philip Morris, and the company's doing pretty well recently. So keep your eyes on Tat, guys. Mutant Ref, it would have been awesome if 2 Teslas crashed on the road behind you. That's we never wish bad on anyone. Expert Trading, Tat's my favorite stock. Thanks for bringing it to us. My pleasure. Angel Sanchez ACB has also taken a 30 mil charge for the terminated UFC deal. Holy smokes, guys! It goes from being, you know, hype, everything's exciting, to taking a $30 million hit from the deal. Alphonse Royer watched the whole video for the algorithm, and that's what I'm talking about. You guys are dedicated. Thank you for all that stuff. And we're going to do one more comment because we got so many awesome comments. Finally, Troy Levy, Tesla is so overvalued. When it hit 1,000, I laughed. When it hit 2,000, I couldn't believe that people were that specific word. I'm just sitting on cash and gold stocks waiting for the crash. And I love the discussions going on in the comments, guys, so feel free to drop those discussions. And once you guys figure out which commodity in fact I'm talking about today, then you can offer those comments in the discussion or in the comments below. So anyways, let's get into the market recap now. So in terms of the Dow, S&P, and the NASDAQ, holy smokes, guys, we're getting a 3.21% rally on the NASDAQ and a 2.49% rally on the S&P 500. So we will be taking a look at the charts for the S&P and the NASDAQ. I just wanted to say U.S. stocks bounced on Wednesday with the NASDAQ gaining 1.5%. Now it's picking up steam. As a rout in technology shares halted and investors shrugged off news that AstraZeneca had paused global trials of its experimental cure. So Tesla jumped 8.8% after shedding about a fifth of their value in the previous session following its surprise exclusion of the S&P 500. Apple, Salesforce, and Microsoft, which have borne the brunt of the tech rout, were among the top gainers. So let's see what's going on in the S&P 500 is gaining 2.49% after that nice little correction after we just absolutely wiped out 3,500 on the S&P, and we're still well above previous all-time highs. So we'll see if the rally can continue. The NASDAQ is having an insanely strong day and still well above record all-time highs, previous record all-time highs. So the tech rally continues by the looks of it. And this recent dip, it actually looks like one of the biggest dips that we've seen in quite some time, if not the entirety of this whole rally, one could say. So looking pretty good for tech yet again, and it's not a big surprise that people just bought the dip. Now let's take a look at gold. Gold is pretty steady today, up $13 per ounce, up 0.68%. So on a day when tech is rallying, the markets are rallying, and gold's in the green. That's showing some strength, in my opinion, for the precious metal market. It's definitely what I like to see. And it's interesting, though, that gold is actually rallying more than silver today on a positive economic day, which makes me want to take a look at the US dollar. So let's take a look at the US dollar index, see what's going on. The US dollar is down 0.2% or 0.19 points to 93.26. So it's been a little bit of choppy trade up and down. The dollar didn't break to the downside, and now we are seeing a little bit of strength. We'll see if that lasts. I do feel like the dollar could trade sideways for a little bit, but the next thing that could potentially move gold and silver yet again is another move to the downside. We saw a really big move to the downside for the dollar from like the 96s to the 93s, and that really sent gold quite up there. But now it looks to be like the dollar is finding some support. I hope it doesn't, but if it does, we could see some sideways trading for gold and silver over the next little while. But the key levels remain. Silver is still above 2650 and gold is still above 1900 and 1920. So overall, looking pretty good to me. I just want to read a few quick headlines, a few quick comments, and then we're going to get into that one sector and those three companies that we're talking about. So Stanley Druckenmiller says the stock market is an absolute raging mania. Everybody loves a party, but inevitably, after a big party, there's a hangover. Right now, we're in absolute raging mania. We've got commentators encouraging companies to do stock splits. Companies then go up 50, 30, 40% on stock splits. That brings no value, but the stocks go up, which I agree. So it's like, oh my gosh, this stock's, now it's so much cheaper. Tesla was $2,500, just as an example. Now it's $500. Perfect. Go right back up to $1,000, which valuation-wise, we got to be careful. Always think before the split if you're investing in a company that did a stock split or something like that. So that's just one expert opinion, but I wanted to point that out. And the last thing we're talking about here, we actually had a little bit of commentary on gold before we dive into that one specific. Tesla shares plunged. Is gold next? This scares Gary Wagner. Equity markets have seen some strong selling in the last week. Lingering uncertainties in the economy, said Gary Wagner, editor of the Gold Forecast. We are seeing a recovery, but the recovery is much slower than anticipated. Wagner sold off his positions in Tesla as soon as the company announced stock splits in late August. A candle that burns at both ends burns twice as bright, but for half the length. Tesla was on fire. It went up dramatically at first, so anytime you see a market move up parabolic, it will usually fall parabolic. So just emphasizing caution. Now, I don't think that's the same for gold. Gold just didn't go parabolic. It's been nice, slow, and steady. So we will do some more thorough updates for gold, but this video I want to talk all about Goldman's favorite commodity. So Goldman's favorite commodity has been on a tear and could have further to run. Goldman Executive Director Jack O'Brien and his team attributed their optimism in part to a recovery in the autos and appliances sector, ongoing strength in the Chinese property market, and the second highest single-month credit issuance in China on record. Copper remains Goldman's favorite commodity on the basis of cyclical and structural support and ongoing supply issues, with Glencore and BHP the company's best position to benefit from rising copper prices, according to the bank. So copper, guys, that's what we're talking about. And so now copper is, or it's been for a little while, above $3 per pound. I believe that's how it's denominated. So let's take a look since the crash. Copper at $2 now, it's just above $3 per pound. And over the last 5 years, the commodity has held up pretty well, you could say. Now, Goldman is the most bullish on copper of all the commodities. And let's take a look at 3 interesting copper mining stocks to consider. The first company, it's a smaller cap company. That company is called Copper Mountain Mining, which is a $177 million market cap. The company is in a very safe mining jurisdiction, and the stock is trading right at 52-week highs, up another 4.49% today. So let's take a quick look at their August 2020 investor presentation. We're just going to briefly go over these companies. I just want to highlight them, bring them up, offer, open up a discussion in the comments for you guys to drop your favorite copper mining stocks, and we can look a little bit more into copper. I do think that these copper mining stocks will perform stronger a little bit later in the commodity cycle. I think now, is the time for gold and silver, just as there's still some uncertainty. We could still get some more volatility, but later on, as the economy starts to recover further, I think that these base metal stocks will perform. But as we know, now might be an interesting time to take a look at it, or take a look at these stocks if we can get some prices cheaper before things run higher. So copper growth from a solid foundation, tier 1 mining jurisdiction, long life assets based on reserves, low capital, high return, organic growth prospects, and they are in Vancouver, in Canada, and in Australia. Their Eva copper project, and in Brisbane. So their flagship mine is located in southern BC. It is a copper gold deposit, conventional open pit with strip ratio of 1.58, 40,000 tons per day plant, expanding to 45,000 tons per day with the potential to increase to 65,000 tons per day. Long mine life of over 31 years based on reserves. So here's their reserve value by metal: 31% gold and silver and 69% copper. 2020 guidance of 70 to 75 million pounds of copper, 24 to 28,000 ounces of gold, and 260 to 300,000 ounces of silver. All in cost $2.20 to $2.35 per pound for copper. So that's pretty good. And they have 69% exposure to copper. So we're not going to go too much in depth, but crunch the numbers, do the math. Pretty good all-in sustaining costs and pretty good diversity and exposure to copper. So if you're looking for maybe a smaller cap play in the copper sector, Copper Mountain Mining might be one stock to take a look at. Now let's take a look at the big boys. We're also taking a look at BHP Billiton. So BHP Billiton, it's got a $135 billion market cap with a 7.37%, says investing.com yield. So I would like to confirm that though. So you guys always be careful because Yahoo Finance says that the company actually has a 4.15% dividend yield. So that 7% dividend yield kind of threw me off. I don't know what they're using to calculate that, but BHP Billiton, one of the largest companies. Now let's take a quick look at their business because I couldn't dig up their investor presentation. It was so frustrating. So we got different businesses: minerals in Australia, minerals in the Americas, petroleum, global locations, and marketing, of course. So I just simply wanted to take a look at their copper assets. So they got projects in Chile, Peru. They also have projects in Australia. So guys, we're just going to talk a little bit about their copper asset in Australia. So Olympic Dam is one of the world's largest ore bodies, located 560 kilometers north of Adelaide. It is one of the world's largest deposits of copper, gold, and uranium, and it also has a significant deposit of silver. Olympic Dam operates a fully integrated processing facility from ore to metal. So look at their projects. This is a massive, massive company that actually pays a pretty good dividend. So looking at things now, this company I gotta say, it's on my watch list. It did have a pretty good 6 months, running from the low 30s all the way up to the 50s. But this commodity cycle continues. We are not even at all-time highs. The stock has seen highs of almost 100, if not $100 back there in 2011. So I think that these large caps have room to run when the market takes that next leg up. So the last company we're talking about is Freeport McMoran Copper and Gold, ticker symbol FCX. Also a large cap company, not as big as BHP, with a $23.3 billion market cap and a dividend yield of 3.48%, 52-week range of $4 to $16.33, so trading right at 52-week highs. I also just want to double check that dividend for you guys, see what Yahoo Finance is. So 3.48%, that seems a little bit more reasonable, although that's a pretty hefty dividend for a stock that has such exposure to, the mining sector, not to mention copper and gold. So let's take a quick look at Freeport's investor presentation, just as I was actually able to find something. Now, this is actually their second quarter conference call, but in this presentation, we can actually, see some information about the company. So in terms of their Q2 2020 highlights, so they produced more copper than they expected, they sold more gold than they expected, and their cash costs were lower than expected along with capital expenditures. So it looks like they had a pretty good quarter. Now let's see what's going on right now. So this is their market commentary. So the Chinese economy is recovering, global fiscal and monetary stimulus adding support, supply constraints in focus, mine supply scrap scarcity, declining stocks market well positioned as economies recover, higher price required to incentivize over 5 million tons per annum mine supply gap to 2030. So here's the copper price. We saw a really nice recovery. Oh my gosh. So guys, now we've got some music playing on the fire alarm, so we're just gonna have to, push through it. If you guys hear some music in the background, it's someone decided to play some music over the PA. So guys, this is so distracting, so do your research on Freeport McMoran Copper and Gold, and we'll have to dive into the charts now. So we'll see if you guys catch some of the sounds over the PA. All right guys, now it's time to dive into the charts and all of that good stuff. So in terms of the MJ sector, let's take a quick look at the MJ sector. We're seeing Koya's Beverages, Namaste, and Ignite International Brands, 3 biggest gainers. In terms of biggest losers, Body and Mind, Ianthus, and Zenabis Global, 3 biggest losers on the day. So in terms of the dividend sector, sorry, this music's making me laugh. Brookfield Infrastructure Partners having another great day. Spheric Corporation and the utility sector all gaining on the day. Overall, it's just a pretty green day. Now let's take a look at the gold and silver stocks. In terms of gold and silver sector, we are seeing Kinross, Wheaton Precious Metals, and Fosterville make a little bit of a recovery. Awesome. Now guys, in terms of the tech stocks, we are seeing a big rally for tech stocks. Tesla, Microsoft, and Apple, 3 biggest gainers. And then finally, our broader 2020 watch list. We're seeing JNUG, Tesla, and Kinross, 3 biggest gainers. And Lululemon is declining quite substantially today, guys. So sorry I had to cut this video short. We had that very distracting music playing over the fire alarm, and some guy kept saying testing, testing. So tomorrow we'll be back with another exciting video, your market recap. We're out of here. Always remember to purchase capitals for information, education, and entertainment purposes only. Don't buy or sell stock because you heard it on here. Buy or sell stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.